Welcome back to another episode of Stock Talk. If you guys are new to my channel, welcome to my channel. My name is Julie, and in today's video, I want to talk to you guys about dividend stocks. Actually, I want to show you how to invest in dividend stocks and how to calculate your return on your money. So in today's video, I'm not going to give you any particular dividend stocks. However, I want to show you the difference between investing in a dividend stock and reinvesting the dividend money that you receive. And I want to also show you what difference it makes by adding monthly contributions to your dividend portfolio. So for today's example, I'm going to be using a stock called Crestwood Partners, and the ticker symbol for that is CEQP. So Crestwood equity is currently trading around $30, and the annual dividend yield is 8.3%. So that is on a little bit of a higher side than your typical dividend yields, but I just wanted to use this for illustration purposes, and I want to show you what the power of a high dividend yield does in addition to reinvesting your dividend payout and adding to your portfolio on the monthly basis. So I'm going to go through this step by step. Let's say for these illustration purposes, we only have $5,000 that we can invest. So right over here where it says the investment amount, you will just enter $5,000. And this will automatically calculate for you how many shares you can purchase with the initial $5,000. So you can see with $5,000, we can purchase 167 shares. Now you are going to be entering the holding period. And again, for this illustration purpose, let's say we are investing into the stock for 10 years. Now you also have an option of selecting how often the dividend stock pays, whether it's bi-monthly, monthly, twice yearly, semi-annually, annually, or quarterly. So this stock pays quarterly, so we're going to leave as is. And for the first illustration, we are not going to be adding any contribution to this investment portfolio. We also going to ignore the tax rate for right now, and we're also going to ignore the annual dividend increase expectations as well as the annual share price increase expectation. And we are not going to be using the DRIP, which the DRIP is the dividend reinvestment plan. So I just want to show you what your money looks like after 10-year investing with only investing $5,000 and not doing anything to it and not reinvesting your money. So let's hit calculate by return. So if we scroll down, we can see that it says at the end of 10 years, our ending balance is $5,000. Now this is not quite accurate because obviously we're getting paid a dividend, but this calculation is assuming that you are taking out the dividend payments and that you're not reinvesting it. Therefore, you are left with your initial balance of $5,000. However, if we take a look at our annual dividend income, we can see that after 10 years, we have an annual dividend income of $418, which gives us a total dividend payout of $4,184. So really, by investing $5,000 into this company after 10 years, by not adding any money on a monthly basis or reinvesting it with a DRIP, you are left with roughly $9,484, which, if you ask me, that's not really a great investment. If we scroll down even further, we have an actual breakdown. So we can see in year one, we have 167 shares, which is an annual dividend payout of $418. And the stock price is $30. The new balance is $5,000 because, again, we're not reinvesting the dividend payout and we are not adding any money to this investment portfolio. So if you scroll down to year 10, everything is exactly the same because we have done absolutely nothing with the stock. Now I want to show you what a difference it makes if you add as little as $100 a month to your portfolio. So we're going to go to annual contribution and we're going to add $1,200, which is $100 a month, and we are going to recalculate this. So now our ending balance is $17,000, which really is just the $5,000 that we initially invested plus $100 a month, which is over 10 years, is actually $12,000. So that's $17,000 total. So that's all still just your money that you invested. But we can see that after 10 years, our annual dividend income is now $1,322 for a total payout of $8,703. So that would really give us a total of $25,703. So let me scroll down and let's take a look at the breakdown. So in year one, we had our initial 167 shares and we had a payout of $418. Year 2, we have more shares because we invested $100 every month for 10 years. So in year 2, we have 207 shares, which gives us an annual dividend payout of $518. Year 3, we have 247 shares with an annual dividend payout of $619. And if we scroll down to year 10, we now have a total of 528 shares and an annual payout of $1,322. So that is an improvement from only investing $5,000 and adding money to it on a monthly basis. But now I want to show you what a big difference it makes when you actually reinvest your dividend payout. So right here, I'm going to select with the drip. So this means all the money that we're receiving in the dividend, we are actually reinvesting into the stock. So let me calculate that. Okay, so now after 10 years, we have a total balance of $29,000, $363.95. So this balance is your initial $5,000 plus your $100 a month for the next 10 years, which is $12,000. So that is the $17,000, but then we reinvested the money. So now we have a total balance of $29,363. I hope this makes sense so far. If not, let me know below in the comments and I'll be happy to answer any questions that you guys have. Additionally, we can see that our annual dividend payout has increased to $2,238. So let's go down and take a look what it looks over the next 10 years. So again, first year, obviously nothing changes. But then by year 10, we now have, instead of 500 and some change in shares, we now actually have 867 shares, which brings us to the $2,238 in annual dividend payout. So you can see by just adding $100 a month and reinvesting your money, you're actually almost doubling your money. Not quite, but almost. So you might think to yourself, well, you invested for 10 years and all you have to show for it is $30,000 and a $2,000 annual dividend payout. Well, that's not a lot. But again, remember, you only invested $5,000 and you only contribute $100 a month, which you're probably going to spend on something that you don't need anyways. So why not invest that money and have a higher balance than what you would have to begin with? The first 10 years of dividend investing is probably going to be the slowest growth that you'll see. So if you can add more money to your portfolio on a monthly basis, then of course you're going to grow it faster. Or the longer you grow your portfolio, you'll see the compounding interest rise higher. Also, speaking of interest, I have not included an annual dividend increase, nor have I included an annual share price increase. So let me actually add that and see how that changes the math. So I'm going to go with a modest 3%, which a lot of investors typically look for a 5% annual dividend increase and a 5% share price increase. But I'm just going to go with a modest 3% and show you what difference that makes. So now we can see that by still only investing $5,000 initially and only adding $100 a month, for 10 years, we have now increased our portfolio from $29,000 and some change to $40,000. Additionally, we can see that our annual dividend payout went from over $2,000 to almost $4,000. So that also almost doubled. So you can see how all these factors play a huge role when you're investing in dividend stocks. And again, we could have $5,000, invest $100 a month, but not reinvest the money. And let's see how that will change it back. So by not reinvesting your money, you're now cutting your balance in half. And you're also cutting your annual dividend income in half. So again, the smart way to invest is by reinvesting your money. Now, I said earlier that the first 10 years is probably the slowest that you'll see your portfolio grow. So let me change this to now 15 years. And I will keep everything the same. So we're still contributing $100 a month. We're expecting 3% annual dividend increase and 3% annual share price increase. And we are reinvesting the money. So after 15 years, we would have a total of $92,000 and an annual dividend payout of $10,000 and $703. Now, how does that sound? I think that's incredible, especially since we only invested 5 more years. So you can see how it went from, let me show you again, from only $4,000 annual dividend income to only 5 years later to $10,000 and $700. So that more than doubled your dividend increase, and you only invested your money for 5 more years. Now, if you have your money sitting for 20 years, then you will have a whopping balance of $219,000, an annual dividend payout of $30,000. So now we're talking. And remember, we initially only started out with 5,000 and you only contributed $100 a month for 20 years, which is roughly $24,000. So plus the $5,000. So really that is only $29,000 that 20 years ago you invested, and now you have a 657% return on your money and an annual dividend payout of $29,000. So that is incredible. Don't you agree? But I do want to show you the difference that it makes when you don't reinvest your money. So right now, again, we started with $5,000. We invested $100 every month for 20 years. And after 20 years, we have accumulated $220,000 with an annual return of $30,000 in a dividend payout. Now, if we do not reinvest this money, so let me go back and unselect this and recalculate this. You can see that by not reinvesting your money, you now only have $41,000 at the end of 20 years, and your dividend payout is only $5,709. So that is a huge change. So that's why I want to point out to you how important it is to reinvest your money at the beginning stages of your investing, because you are not going to live off dividend payments right away. Unless you already have $100,000, then perhaps, but if you're starting out with $5,000 or even less, then you are not going to be living off dividends anytime soon. Additionally, I want to show you what it looks like when you do not add any money to your portfolio. So let's say we do not invest any money whatsoever except for the initial $5,000, and let's see how much money we'll have after 20 years. So now you invested $5,000. You did not reinvest any money. You did invest it for 20 years. We did expect an annual dividend increase of 3%, and we also expected a 3% annual share price of 3%, but we did not reinvest the money and we did not add any money. So after 20 years, our $5,000 will be $9,030. And our annual dividend income is $1,286. So you can see what a huge difference it makes by A, adding monthly money, and B, reinvesting your money. And I want to give you another scenario. So we are not adding any money to our portfolio. However, we are reinvesting it. So let's see what that will look like after 20 years. So a little bit better. So you can see just by reinvesting your dividend, you increasing your end balance to $82,771. And your annual dividend payout is now $11,171 at the end of 20 years. So a lot better. And again, as a summary, you can see that by just adding $100 to your portfolio and investing for 20 years, you're going to have such a big return on your money. And you might not be able to do $100 a month. Maybe you're only able to do $50 a month. So that would still be $600 that you could annually contribute. So after 20 years, that would still leave you with $151,000 and an annual dividend payout of $20,000. Likewise, I want to show you what your portfolio would look like after 20 years if you guys are able to invest just a little bit more initially and a little bit more monthly. So let's say you have $10,000 to start off with, and you are able to contribute $200 a month. So let's calculate that and see what our returns would look like after 20 years. So after 20 years, after initially investing $10,000 and only adding $200 a month for the next 20 years to your portfolio would have grown to $439,184.79, and you would have a whooping $58,951 in an annual dividend payout. How incredibly amazing is that? There goes to show the power of reinvesting your dividend income and adding to your portfolio every month in order for you to one day comfortably live off your dividends. So you see, dividend investing actually takes some time, and you are not going to grow rich overnight if you invest in dividends. It does take time. Of course, the more you are able to contribute to your dividend portfolio, the faster it's going to grow. The longer you can hold it, the better it is also. And if you guys are looking for some high dividend stocks, I actually made a video on those a few weeks back. So I will link that in the description box for you guys below, so you guys can check it out and see if you want to pick out some of these stocks. I really hope I inspired you guys to start investing, even if it's just starting out with $100, but you can see if you keep at it how you can grow your portfolio over time. If this video helped you guys, please be sure to hit the like button. Consider subscribing to my channel if you haven't already. I would greatly appreciate that. And I will see you guys in my next video. Until then, bye-bye.